today I am excited to welcome Mr. Atul Varma, a leading tax consultant in the UAE, to our profound podcast. He is the founder and managing director of Bazar Accounting and Management Advisors, providing best-in-class accounting, corporate tax, VAT, HR and payroll outsourcing services and management consulting. Hi, Mr. Atul. Welcome to the show. It's a great pleasure to have you here with us today.
Thank you, Ms. Alicia. Thank you for inviting me. It's an honor to be here.
Mr. Varma, you have an extensive background in the outsourcing industry. With over 20 years in the industry, what key changes have you observed in the outsourcing sector, particularly in accounting and tax services, and how have these changes influenced your practice?
Yes, it's a very good question. In fact, yes, I do carry over 20 years of experience, and I can say UAE has developed since the last few years, especially it's become a developed economy and a more matured economy by introducing taxation. So we see a lot of shift in tax compliances, and we see businesses are required to be more tax compliant. So a huge shift of demand for outsourcing service providers or tax service providers in this market.
The UAE has seen significant changes in tax legislation over recent years, including the introduction of VAT and corporate tax. How have these changes impacted businesses in the UAE, and what should companies be aware of to remain compliant?
So yes, the companies, because of this introduction of corporate tax and value-added tax, it has become very important for businesses to maintain the books of accounts and disclose the correct information to the federal tax authorities. So the most important and the significant changes is what I always tell is maintain your accounts, because with this the businessmen will know what is the right tax liability they have to pay and their tax position.
In your opinion, what are the most common misconceptions about tax compliance in the UAE, especially for international businesses looking to operate here?
In my opinion, the most important thing is that we have to agree to the fact that UAE is now a tax compliant country. It's no longer a tax free or tax haven. So with this, what I feel with any businesses who wants to operate here should do one thing is tax planning, entry market study before coming in, getting into the business, to ensure that they are aware of the post-licensing. One of the requirements is to be tax compliant. So yes, I feel businesses should focus a lot towards tax planning of getting themselves into this business, knowing about double taxation treaty with other countries internationally, so that they know exactly that when they come to UAE, what is expected out of them.
Mr. Atul, you have written extensively about outsourcing in the Middle East. So what do you believe are the main benefits for companies choosing to outsource their accounting and tax functions?
We see the benefit of outsourcing accounting and tax services is the businesses can concentrate on their business, which is the real reason why they've come in, and leave all the compliances behind in the hands of specialists, be it accounting specialists, tax specialists or payroll specialists. So we see that this is the biggest advantage for the businesses. And the second thing is they need not have to worry about the ever-changing tax regulations, because the books of accounts or tax filing is in the hands of tax specialists.
How do you see the role of technology evolving the outsourcing industry, particularly in areas like HR and payroll management?
So yes, technology plays a very important role, as we see that many businesses would like to move away from the old methods of doing it like in Excel or Word, etc., to a more advanced and confidential driven softwares, especially in the HR and payroll, because by the nature itself, it's salary information, very sensitive data. So we see a huge shift of demand for companies to have software applications and running their payroll records all over the software. And I think this is a very important thing, because nobody would like to disclose their salaries, and also every company would like to be in compliance towards it. So we see a huge shift of movement towards technology, especially on the HR and payroll front.
What are some of the most significant challenges your clients face, and how does your firm help them navigate these challenges?
So the most significant challenge which I have seen with any client is getting updates from the regulators, be it the tax authorities or be it the accounting authorities, or for that matter in payroll. So we see they are not educated because they are so much focused on their business. So here where we see the biggest challenge for our clients, and we love to educate them, advise them and say, okay, what they need to do to be updated with regard to what has been announced by the authorities here.
What are some of the emerging trends or issues in the accounting and tax sectors that businesses should be aware of over the next few years?
Of course, businesses should be aware of most important thing is the corporate tax, which is announced last year. So the very immediate thing which every businesses should focus is on the corporate tax registrations. After that is, of course, maintaining the books of accounts. Then there is transfer pricing rules which will be applicable in this part of the world for most of the companies here, because we see a major category of businesses here are SMEs. So we see these are very important things which any businesses should be taken care of. So the major shift we see is, yes, they need to be more serious about being in compliant to meet the requirements here.
Mr. Atul, are there any upcoming projects or initiatives at Bazar Accounting and Management Advisors that you are particularly excited about and would like to share with our listeners?
Yes, this is a very good question. In fact, yes, I am very excited to announce that Bazar Accounting and Management Advisors have opened a new venture, BAM Tax Advisors LLC. This is specially to be focused on tax compliant requirements for our customers, be it value-added tax, be it corporate tax, be it transfer pricing, be it filing of returns, anything and everything, be it double taxation relating to tax, BAM Tax Advisors is there for you.
Can you explain the concept of the reverse charge mechanism or RCM and its implications for businesses operating in the UAE?
Yes, of course. So in case of RCM, I will just make it very simple for you. We know that the VAT is collected always by the suppliers. It is the responsibility of the suppliers. But in case of RCM, this responsibility shifts to the recipient. Okay, so with this, what happens is for any businesses, just to make sure that they are in compliance with RCM, they just need to make sure that they have proper records maintained. By having proper records maintained to support the RCM, it is the businesses are all in compliance. So the owners shift from supplier to recipients.
Double taxation is a significant concern for many international businesses. How does the UAE address double taxation issues and what should companies be aware of?
So UAE has signed over 140 double taxation treaties worldwide. So this helps businesses to take the benefit of the double taxation treaty sign. This way they are in tax compliance. They need not have to be worried about eliminating taxes. So, and this gives businesses a big boost in doing business in UAE.
Can you provide insights into the recent changes in corporate tax regulations in the UAE? Specifically, how should businesses prepare for potential fines related to non-compliance?
Yes. So the recent announcement which was done by the Federal Tax Authority was that every businesses should register for corporate tax registration. So there is a timeline mentioned by the authority based on the licenses which are issued. And every business should register within the timeline. Otherwise, there is a 10,000 dirhams fine for late registrations. So this is the recent announcement from the authorities.
There often needs to be more clarity regarding corporate tax regulations in designated versus non-designated free zones. Could you clarify the differences and implications for businesses?
See, first of all, I would like to start and mention here is that all free zones are not designated zones. However, all designated zones are free zones. In order for any businesses to avail the benefit of not paying the 9% corporate tax, there are certain eligibility criteria which they have to meet, like in terms of qualified activities, in terms of audit of financial statements, in terms of maintaining transfer pricing documents. And once all these eligibility criteria are achieved, then yes, they can apply for non-payment of 9% corporate tax and fall under the category of exempt. But then this requires a detailed investigation from case-to-case basis.
For Indian businesses considering expansion into the UAE, what are the key tax benefits they can expect and how might these influence their decision to set up operations here?
So my advice to any Indian businessman is that the corporate tax rate in UAE is 9%. Compared to in India, it is 30%. So straight away benefit of 21% if they open their business in UAE. And UAE is welcoming Indian businessmen here to expand their business. Plus UAE is connected to the world as a central location to the world.
When forming a new company in the UAE, what are the essential factors to consider to ensure tax efficiency and compliance from the outset?
Yes, while while forming a new company in the UAE, my advice is for anybody to look into the double taxation treaty. The other second most important thing is to consider the rate of corporate tax. We can say that in UAE is one of the lowest corporate tax countries in the world with just 9%. So these are very important factors for any businessman to consider while establishing their business in UAE.
Regarding tax benefits, how does operating in a free zone differ from a mainland setup? Which option would you recommend for businesses looking to maximize tax advantages?
So here the very important thing which we always advise our clients is to understand what is the purpose of them doing business in UAE, and also to do a detailed feasibility study on the business model they're going to be working. This will also cover from the tax angle as to what is the advantage of opening it in a free zone versus mainland. After doing this feasibility study, it will become very easy for a customer to decide whether to set up in a free zone or to set up in the mainland.
When should businesses register for corporate tax in the UAE, and is there a cap or threshold that determines this requirement?
So here I would emphasize the point which the FT had announced. They had given a clarification for all businesses to register for the corporate tax based on the license issuing date or license issuing month. So the guidelines are very clear about the last date by which every businessman should register. This is for existing companies, whether they are 2 years, 3 years, or even 10 years old company in this country. With regard to new businesses which are establishing now, they have 3 months from the date of license issue to register. Delay in registration will result in a fine of 10,000 dirhams.
Which specific activities or sectors are exempt from corporate tax in the UAE? How can businesses determine if their operations qualify for these exemptions?
So yes, the FTA has announced certain list of activities which are exempt from corporate tax. They are like ownership and operation of ships, headquarter services to related parties, holding of shares, logistics services, reinsurance services, activities ancillaries to the listed services, financing and leasing of aircraft, etc. But then these are again subject to certain eligibility criteria, which are like, make sure that you meet the qualifying activity requirements. Secondly, audit of financial statements. Third is transfer pricing rules. Then there is a de-minimize rules. So if they meet all these criteria, yes, then they are exempt from corporate tax.
What is the procedure for registering for corporate tax in the UAE, and what steps should businesses take to ensure a smooth registration process?
Yes, so the steps to register for corporate tax is that every business should log in to the Emera tax portal, create a new account, and submit all the relevant documents such as the trade license copy, memorandum and articles of association, deciding about their financial year, which is as per the memorandum and articles of association, then the passport copy of the shareholders or UBO, as well as the Emirates ID copy, email ID and contact number. So with all this information, the assessee, or I can say the businessman, can just go and register for corporate tax.
Mr. Atul, thank you so much for joining us today. It's been great hearing your insights about the tax landscape in the UAE. Before we wrap up, would you mind sharing us about your association with Profound?
So I'm very excited about our association with Profound because Profound provides incorporation, company formation services and PRO services, and Profound would like to have an extended partner, which is Bazar Accounting and Management Advisors, where we come in place to support on post-licensing services such as accounting and tax compliance services. So we see this great business strategy or synergy between the two firms to support our customers and to educate our customers not only from an entry point but also in terms of what are the requirements for them on a long run to do their regular businesses. So I see a great partnership between Profound and Bazar Accounting in this regard. Thank you, Alicia, for inviting me, and I thank Profound for this opportunity. Thank you so much.
Thank you for joining us on our podcast today. Until next time, stay informed, stay inspired, hit subscribe and stay profound.